See, illustration number 14. XY Limited retail florist is for sale at an asking price of rupees 62 lakh. Okay, the price is for sale and the price they are demanding is 62 lakhs. And the potential buyer who has asked you to give him opinion as to whether the asking price is, now you are the CMA, he is asking you whether I can pay 62 lakh amount or not. The potential buyer has only limited information and the buyer has having only limited information, and he is not knowing much about it. But what we come to know is 82 lakh is the sales amount, and the last year's tax return annual profit was rupees 2,40,000 before tax. Okay, this was the annual profit. Now after certain derivations we have got to know about this particular details, that there are total number of firms, there are 38 and here there are 33. Mean ratio, average, the ratio is, the price ratio is 0.55. All such details we are able to find out, suppose. And also top 10 players in descending order of price to sales ratio has been given in descending order. Okay, so now we need to calculate here. One thing is that the average is 0.55 and here the average is 3.29. What is coefficient of variation? Variation is the differences that could make variation that could happen. It can go up or it can go below also. It is 0.65 here and here it is 1.52. So the whatever the lower the variation is, that would be much good, the risk would be much low. So in this case this has been considered as a basis for, as a guiding factor for calculation, price to sales ratio. Now the average is 0.55 and the variation is 0.65. Price to sales ratio, price is 62 lakhs and sales is 82 lakhs. Here what is the answer? That is 62 lakhs divided by 82 lakhs. The ratio is 0.756, while average is 0.55, maximum is 2.35, variation is 0.65. This variation was considered just to find the through which guiding factor we can calculate the answer. Now price to sales is 0.76. So as per this table we need to find where we are lying. Okay, if the firm business is having 82 lakhs sales and people are going to pay about 2 crores for that. So 2 crores for 82 lakh, that means the calculation is around 2.43 price. The price, if we are paying more, that means the value, the ratio is going to be high. So how much, it's given in descending order, it's already mentioned. So how much behind we are going on in descending order, that's more good. Okay, average is 0.55 while we are paying little bit more, that is 0.76. Still we will find out how much is the, what is the relevance. See, we are here, the ratio, the 8th player and the 9th player, we will find the average of those. Average is 8th and 9th is 8.5. 8.5 divided by total number of firms is 38. So the percentage is 22. In other words, we are among this 22% of players. Okay. Now the asking price is 62 lakh and over 82 lakh business. The price may be this amount divided by 2, the average, and 82 lakhs, the price to sales ratio is around about 64.37 lakhs would be the price. See, we know the price ratio of 8th and 9th, that is 0.85 and 0.72. We will divide, we will take the average because we are lying in between them. So the average is 0.85 plus 0.72 divided by 2 is equal to 0.785. Price to sales ratio, this refers to price divided by sales. If this is 0.785 average price and the sales is 82 lakhs, so on an average the price which we could have paid is around multiplication 64.37, while the XY Limited retail florist is asking only 62 lakhs from us. As per the details and whatever financial details of several retail florists in the market, we have received the data, and from that we have calculated that this would be the price, but he is only asking us 62 lakhs to pay. Then what we will do, we are going to accept the offer. Okay, you will ask, like in question one more line was written that last year's tax return reported an annual profit of rupees 8,40,000 before tax. Why this was not considered in calculating the reasonable price? The one thing you need to understand is price to sales ratio was being considered because the dispersion was lower, the variation was lower as per the coefficient of variation ratio given. 0.65 is lower. Okay, so we have only considered price to sales ratio as a guiding factor for all the further calculation. If price to earnings ratio would be considered considering the coefficient of variation, then that would be required. 8,40,000 would be needed for our further calculation. But here, as it was on the basis of price to sales ratio, that 8,40,000 amount is nowhere used in the further solution. Illustration number 15. Financial statement of both the companies given A and B here, and both the firm balance sheet and income statement is provided. Okay, additional information is also there, number of equity shares and all such. Okay, so what we need to, in the first, assuming that these two firms are in the process of negotiating a merger through an exchange of equity shares is going to exchange. You have been asked to assist in establishing exchange terms, and you need to find all those things. Okay, in the first part they have asked us to decompose the share prices of both the companies into EPS, okay, P ratio, okay, also segregate EPS figures into return on equity, okay, book value per share. Fine. So how it would be calculated, we'll first write all the required data which we are having. There is A limited, and B limited. Now we are having number of shares 10,000, here 8,000. Dividend payout ratio is 40%, 60%, fine. Market price is 400, 150. See, we need to first know earnings. Earnings is profit after tax, because EPS is earning per share is earnings divided by number of shares. Earnings profit after tax is already given, so we'll directly write the 2,10,000. Profit after tax would be less taxes, all the expenses, net earnings. It's already given in the question income statement last line, so we'll directly write 2,10,000 and 99,000. EPS we can calculate 2,10,000 divided by 10,000, it is 21. 99,000 divided by 8,000, it is 12.375. Fine. Now EPS, MPS is there. P ratio could be easily found. P ratio is equal to MPS divided by EPS. 400 divided by 21, 19.0476, and here 150 divided by 12.375 is equal to 12.12. Now return on equity. Return on equity is whatever total equity and the net income. Okay, in question number 13 I had explained a little bit about it. Net income is 2,10,000. Whatever is equity, equity is 10 lakh plus 2 lakh. Retained earnings also comes under equity, that is 12 lakh. Here it is 8 lakh. 99,000 divided by 8 lakh. Answer is 0.175. 99,000 divided by 8 lakh, that is 0.12375. Okay, now book value or intrinsic value per share. Book value is the net worth. Net worth is 12 lakh, equity we know, whatever total equity holding, and here it is 8 lakh. Net worth divided by number of shares. Number of shares given is 10,000, and here it is 8,000. So it would be 12 lakh divided by 10,000, 120, and here it would be 8 lakh divided by 8,000, it would be 100. Fine. So the first part is finished. Estimate future EPS growth rates for each firm. Okay, we know dividend payout ratio is given. 1 minus B is equal to DPR. Dividend payout ratio is 40%. 1 minus B is equal to this much. B is equal to 60%. And in the other case, B is equal to 40%. Okay, you need to know future EPS growth rates for each firm. Growth rate is equal to B into ROE. B is 60% into ROE we had found earlier here, 0.175. 10.5. And the other case, 40% into ROE is 0.12375 is equal to 4.95. Okay, fine. Now, third question. Third says, based on the expected operating synergies, A Limited estimates that the intrinsic value of B's equity share would be rupees 200 per share. Okay, it estimates that the book value would be 200 of B's equity share. Currently B's equity share market price is 150, but it is saying it would be, due to synergies, it would be 200 per share. You are required to develop a range of equity share exchange ratio that can be offered. Okay, fine. See, currently it is 150 and A Limited is having 400. The ratio would be 0.375. In case the rate increases to 200 divided by 400, it would be 0.5. So the range would be in between this. Okay. Based on your analysis in part 1 and 2, would you expect the negotiated terms to be closer to the upper or the lower exchange ratio? What you would consider? See, what we get to know is the EPS is quite high of A Limited. P ratio is very high. A return on equity is also high compared to this. Book value is also high. Everything is high. So why we will pay more amount? We would pay only 150 rupees market price. Okay, based on the existing share price, we will move with it. Now, further they have asked to calculate post-merger EPS. In the fourth part, they have asked to calculate post-merger EPS, where the exchange ratio is 0.4:1. And we have to check whether pre and post, what is the difference. Fine. Earnings, we know total earnings are 2,10,000 plus 99,000. Number of shares is 10,000 here, and 8,000 into 0.4. So 2,10,000 plus 99,000 is equal to 3,09,000. 8,000 into 0.4 is equal to 3,200 plus 10,000 is equal to 13,200. Dividing this, 3,09,000 divided by 13,200, it gives around 23.4090. Fine. They have asked what is the impact. Okay, so A and B, pre A EPS was 21, here it was 12.375. Post it is 23.4090, here 23.4090 into exchange ratio. The B shareholders would be holding 9.36. Here there is a reduction in the earning per share if the exchange ratio is that 3.0114, and here there is an increase. The shareholders would be having a benefit gain of rupees 2.409 per share. Fine. Now, based on a 0.4, fifth question, 0.4:1 exchange ratio, assuming that A's pre-merger P ratio will continue after the merger, estimates the post-merger market price. Okay. This only exchange ratio we have to consider. Pre-merger P ratio of A is going to remain same. Okay. And post-merger price we need to calculate. Post-merger EPS would be, MPS would be how much? We know P ratio is equal to MPS divided by EPS. So multiplying this both will get post-merger EPS. P ratio they are saying is going to remain same, that is 19.0476, and post EPS we calculated it is 23.4090. What would be the post-merger MPS? 19.0476 into 23.4090 is equal to 445.8852. Okay, post-merger MPS. We need to calculate whether there is gain or not of both the entity. Fine. Pre-MPS is 400 and 150. Post we calculated, we got 446. Approximately they have considered 446. You can take it 445 point something. 446. Now B, it would be 446 into 0.4 because exchange ratio is that much, which would be 178.4. Now here there is a gain of 46 rupees, here there is a gain of 28.4 rupees. Fine. Same way it's been calculated. There is no it has been given in tabular format, but this way also you can calculate. As there is some difference here because I have not rounded off, you might round here. Always calculate as per the books. 2 decimals are considered. Consider only 2 decimals. 19.05 and here 23.41. It would give approx 446 amount. Okay, so you might round off the amounts. There would be no difference if you are going to round off.